The absolute absurdity of Bitcoin is that you could have gone on holidays without internet connection for 7 days, and none of this drop would have meant anything to your Bitcoin portfolio. It's at the same price as it was 7 days ago. The volatility has increased, and that has led to extreme fear flipped into extreme greed. Now looking at some sort of shocking V-shaped recovery. This might even be across the board for Bitcoin, the stock markets, as of course we are in well and truly within the winner's curse phase of the 18-year cycle. That's what we're looking at in today's video. You're joining me, Jason Pizzino, for your roundup of macro cycle analysis, Bitcoin, cryptos, the stock markets, and of course real estate as well. Like and subscribe, don't go anywhere. Heaps coming up in today's video as the markets rebound across the board. Let's start with the stock markets to get a broad picture of the financial landscape before we dive into Bitcoin and cryptos, because big things are happening over in the stock markets. Okay, S&P 500. What we want to look at here is, are we seeing a V-shaped recovery for the stock markets and of course Bitcoin and cryptos later on? Now, while it's still too early to say if it's going to be a V-shaped recovery, there are some minor signs here that you're seeing a higher low being put in, you're seeing higher highs very marginally being put in for the S&P 500. And then we look towards the 50% level and the previous lows that might become resistance. That level is at 5,400 and roughly 20 to 50 points. So they're the lows, and this is the 50% level. So closes above that level is going to be stronger for the case of a V-shaped recovery. However, yesterday's video, we also unpacked the possibility of a rally here to fall into a further decline. However, there is still plenty of support below this market. So I think one of the big things to watch out for, if that is the case, if we're going to see some sort of rejection at those levels, would then be, how is the market perceiving this in terms of market sentiment? Are we seeing further fear, like extreme fear, or are we only seeing the price decline, yet the fear and greed index rising? Could be rising slightly. Maybe the reading here is around that 16, 17 like we saw over the last few days. And if the market falls in price, the fear and greed reading might be higher. Maybe it's sitting at 20 or 21, 22, right? So you would see on the fear and greed index reading, it's starting to climb up while the price moves down. This is what we saw at the bottom with BTC back in November of 2022. Price moved lower marginally from 17.5 in June down to 15.5 in November of 2022, yet the fear and greed index did not move lower, which meant that the market participants, your buyers, your investors, were seeing less fearful activity around those lows. This could be one of those opportunities for the S&P 500, for the NASDAQ as well. Obviously, we need to see how the market reacts to this particular price here at roughly 5,420 points. But so far, in terms of the short term, you've got a small higher low here, higher highs forming. Let's see how it plays out over the next few days, of course. These lows, they typically form on extreme fearful news. All that news came out over the weekend, then on Monday as well. That was the Japanese carry trade, the yen there, basically Japanese investors selling off US stocks to then go and buy yen, which then dropped the US dollar. And they were then putting their money back into paying off loans in Japan. That's basically what the theory has been so far. And that came out so far at that bottom. If it was going to be even worse, you'd probably expect the next day to also be down. Remember, we saw extreme fear like that throughout COVID. It was such a quick sell-off and it kept dropping and dropping. And then we got to that bottom, higher low formed, and then the market continued to climb out of that low, putting in higher lows, even though the news was still bad. We still had a lot of severe bad narratives floating around. We had the second wind of COVID coming through, which was this period here, and it wasn't able to put in lower lows, which then kept the market rising. So in terms of a V-shaped recovery, potentially early days here for the stock market. For Bitcoin, things looking a little bit different there. And we are seeing signs of price support levels being recovered there from BTC. So S&P 500, not looking too bad. The NASDAQ also bouncing off the 50% here from the October low, which was another very severe time in the market. There was a lot of fear there with another Middle East conflict, and we also heard about Middle East conflicts here and Middle East conflicts here. Meanwhile, we're still getting higher lows forming. Another dip after the rally. Again, same sort of analysis here, low to high. Looking at the 50%, 19,200 points. You've also got a few lows back here at 18,900. So let's see whether it can recover from there. Maybe drop, put in another higher low, and then continue to recover. Now, in amongst all of the analysis here for the S&P and for the NASDAQ, there's an important one to look at. This here. So this is basically across the market for this stage of the seasonal period here for the prices for S&P and for the NASDAQ. It's possible that we've still got some choppy times ahead, especially with where you can see the current price action. It's below the top. It's come back to test some of these lows. There is resistance overhead, NASDAQ and S&P now. And maybe we do see some choppy action over the coming months and not a V-shaped recovery. It's still early days, so I just want to keep that one in the backs of our minds as well, as these periods can get choppy, but pretty much across all of the seasonal patterns and the cycles, the last couple of months of the year, coming around that election, just after the election, typically show pretty strong moves to the upside, which also lead into 2025, which is absolutely massive. Make no mistake here. This is what we're looking at for the decade cycles, year of the decade. This is 123 years of history. Doesn't mean it has to be 100% right every single time, but this is the Dow Jones 10-year cycle because there is the most amount of data here for the Dow Jones. So let's zoom in again. This is what this means down here. So we're in year 4 of the decade, 2024. You had 2020, 2021, 2022, 2023, and so on. And typically, you can see that the market has reacted relatively the same to what you see over these decades. 2020, pretty severe drop there. And we've seen this exacerbated because of the extent of the crisis in 2020 and then the amount of money printing, which shot 2021 up, but then it pulled back in 2022. So remember, this was in 2020. Well, this was the cycle using 123 years of history, putting this particular line cycle together. Now, you might disagree with it entirely. That's absolutely okay. Do whatever you want. What we've seen in years 5, generally speaking, is that they do this. They just rocket up. They're one of the best years of the decade. Note that there are other cycles overlaid. I know it can get technical and people say, well, you could be picking and choosing here. But looking at, say, the Shemitah cycle, which is your 7 years, 2015 wasn't as good as this is expecting. But if you can understand that, then you can learn how to apply the cycles to your own trading and investing. 2025 is not a Shemitah year. The Shemitah year was 2022. That was every 7 years, you basically get a down year. All right, so 2025 so far might end up like this, but we're in 2024. So what does 2024 look like? Well, it looks like that, the 4th year of the decade. Strong moves up, corrections, another move up, corrections, and then another move up, higher low, and then you take off for the following year in the decade, 2025. So 2024, looking relatively all right, like we have currently experienced for the NASDAQ and for the stock market. So that leads me to update the VIX and just looking at these cycle low points. Now, I've talked about this maybe being a low or close to the low for the S&P 500. You can see the VIX yesterday, or a couple of days ago actually, spiked to 65. Often when it's spiked to those levels, you're basically almost at the exact low, if not the exact low for that correction. The thing to watch out, of course, is something like 2022, where you had a high spike here, but that only dropped, that spiked to 38. So that was for one of the lows. You can see just there. Let's zoom in. Then you had another spike on the VIX to a lower low on price, but a lower high on the VIX. Another low on the price, another high on the VIX, so on and so forth. And then you finally got the October low here forming under roughly 35 points. So although the price was declining, you can see that the volatility was coming out of the market. There wasn't as fearful as it once was from that first drop. And then you've got the low, the price action put in a higher low. You had the March banking crisis, which was another lower high on the volatility, but a higher high on price, which is a fantastic buying opportunity amidst the extreme calls for recession and how bad the economy was doing, which was absolutely wrong. And then the market takes off from that point, lower highs, lower highs. So we might have another refresh on the VIX itself. Maybe, if we get another pullback, this might be a lower high into another spike and then drops back into the bull market zone over the coming months. That's what I'm looking out for here on the VIX as a potential reasonable area to accumulate if you're into the S&P 500, knowing that it could go lower, but you're in a much better situation here than you were at the tops buying into that market. So that's the winner's curse phase. We're seeing more volatility across the board. I don't think anyone can deny that. I mean, the VIX indicator, which is the volatility index, clearly shows pretty extreme volatility from that particular drop. And then these moves get more and more emotional. Extreme greed to the upside, extreme fear to the downside. That's all part of this winner's curse phase. I don't think this is any different for Bitcoin and cryptos. And of course, crypto is even more volatile no matter which stage of the cycle we're in. Now, some of you have found our free Discord. So I wanted to extend the invite to everyone watching here today. The link is right here. Subscribe to the free report. And then when you get that email come through, you'll get a link to our free Discord. There are updates there that you can see from Michael and myself looking at the markets. We can do this much, much quicker than what we can produce a YouTube video in. Obviously, you got the tweets, you got video updates, TIA reports, the weekly report in case you missed that in your email inbox. Trading results that you can see from all of our traders here doing some absolutely crazy things with their portfolios. And of course, the reviews for TIA Premium if you are thinking about joining the members there. So just extending the invite to everyone. Link is in the top of the video description. Subscribe to the free weekly report and you'll receive that on email. So over to the liquidations here. 24-hour liquidations are at nearly $250 million. Most of those coming from the shorts getting squeezed out as, of course, Bitcoin has pumped into a possible V-shaped recovery. You can see here on the liquidations chart, pretty significant on the shorts themselves as we just covered, and then the major day there where the longs got liquidated on Monday with the dump, even a lot of shorts getting liquidated there. So basically $1.1 billion getting liquidated. Then the next couple of days have been relatively quiet, leading into today with a lot of shorts getting liquidated, which is a nice refresh for the markets after all of the longs getting liquidated. Basically clearing out that leverage so the next trend can resume. Speaking of trends, Bitcoin and crypto in Google, at least Bitcoin has skyrocketed here, going from 22 up to 38. So obviously we're covering this in most videos, just looking at whether the public is getting interested in Bitcoin and crypto again. And you can see here from June into July, it was trending higher than the previous lows. And obviously with that dump on Monday, there's been a hell of a lot of interest in finding out about Bitcoin and crypto. And I'm definitely hearing a lot more about it as well from friends, family, acquaintances. You might be hearing the same thing as well. Whenever something drastic happens in the market, then typically people say, well, that was a crazy day on the markets. I don't know whether they're buying, but hopefully they did. That's essentially what we're aiming for with those days, buying when the dip happens within a major bull market. The fear and greed index, extreme fear was yesterday. Let's refresh this for today, and I suspect it's going to be higher. Bam, straight up to neutral. So we had two extreme days, and then 2 days of fear, a couple more fear here at 30, and now we've just shot straight back up into neutral, which might be part of the extreme volatility that we're seeing at these lows with Bitcoin attempting to create a V-shaped recovery. So what are some of those signs here? If we have a look at the 50% levels, most importantly, Wednesday was a little concerning for altcoins and of course Ethereum as well. For BTC, it was still holding up above that critical low, which we covered on the channel at 53,500. Monday, extreme day down. I had no way of predicting that the market would hit $49,100. The good news is, looking at strength and weakness on a price chart, the strength started to show very, very slightly that there was a close above the low on the 5th of July. So that was another pretty significant day down. And the fact that the market ran down and then was bought up to close above that level is a really, really good sign. So although it was early days and you could never tell, like maybe it just started to fade out the following day, that's one of the first things that you want to see. So if you ever experience another flash crash like we saw on Monday, look towards a significant swing bottom using your swing indicator here, and then see whether the day closes at that level. You can't make that decision within the day. And I know a lot are trying to make the decision on the fly. You really do need to see the data complete, and the completed data is the close. And yes, it's a 24/7 market and the data keeps flowing, but even computer systems, algorithms that traders are using, they all need a beginning and an end point, and that's what the close is about. And so you've got a close above that low, very significant sign. Don't underestimate that whatsoever. Following day, little green day up. The reversal here, the red, slightly lower volume here using Kraken, one of the big ones in the US. And then what we just saw was a big move to the upside, 12%, nearly about $8,000 on the day, top to bottom, and then a close above the 50%. Good sign. That's what we talked about yesterday, 59,500. And then the big one that I was hopeful for over the coming days or even weeks, which happened in 24 hours. We've got one close so far above 61,400. That is a very key level. It's above all these previous lows. It's the 50% for the entire correction now using that Monday bottom. We had the May low here, the July low, now the August low, so 49, and that's the 50% right through the middle. So that's a critical level that Bitcoin continues to consolidate above. That's what it was doing here back in late July before we had the flash crash and then the bounce back above. And of course, to consolidate above this level is going to seem far more strong for that move to the upside. So there was a little confusion in yesterday's video looking at price predictions. I don't like to predict price. I don't like to say Bitcoin is going to hit $150,000 this cycle, or Bitcoin is going to dump to $40,000 in a correction. I don't know where it's going to move to. What I like to use price for is, or the price levels, is to show me signs of strength and weakness. Strength, although it was as scary as it was on Monday, I think 49,000, strength is price action above 44,600, which is the bull market support level. Anything under that level, or closes on a weekly or monthly basis, is going to be pretty severe consequences for the Bitcoin market, right? Because that is my flipping point. That flipping point for the bull and the bear market, underneath that level, not great signs. But I said that on a weekly or a monthly basis. In 2021, Bitcoin did drop under the 50% level, so when it crashed here, but on a longer term basis, on a monthly basis, it didn't close under those levels. So the market continued up because it was showing signs of strength to the upside. So fast forward to where we are today. I mean, in the last 24 hours, things are obviously looking much, much rosy again. People are not as freaked out, and they're trying to get onto some altcoins now. So flipping over to altcoins, ETH has done the first thing it needed to do, get above $2,500 for a daily close. That was the 50% level. So on the dailies, it closed under it for 1, 2, 3, and then reversed. And now the next tackle is 28. You can see all the lows forming here, which even lines up with the 50% of this move, top to bottom, exactly on that point. That's why these 50% are so vitally important for analysis. I mean, that's what I use every single day in all of my trading to look at the strength and the weakness. So the strong part here for ETH is that it's above the 50% of the entire bull market range. Now, in terms of the next range, which is vitally important, it's all of these lows here at about 2,800, call it 29. And the other reason why that's extremely important for ETH is because it's the 50% level of the bear market range. We know for Bitcoin, it's well and truly above that. It's hit a new all-time high, so it's set its own 50% level now. But for ETH, this 50% level is at 2874. So as I said, call it 2,900. Set your alerts. If you can get some closes on ETH, or if ETH can get the closes above 2,900, that's going to set it up in a much stronger position for this next move forward. If it continues to falter here and get rejected, that's not a great sign for ETH, and you'd probably see further downside again, or at least a test of the lows back at $2,400 to $2,500. So keep a very, very close watch over the next few days if ETH can close back above the 50% while there is still strength in crypto and altcoins on this latest run by BTC. Now, in terms of ETH BTC, well, it's still underneath its lows, so that's not a great sign. Ideally, it's going to get back above those levels. And again, the closes around that 4.5, 4.8. You definitely want to see BTC get above those for strength against Bitcoin to attempt to put in bigger gains than BTC. So far, ETH has not been able to put in more gains than Bitcoin over this entire run and is basically on par with where it was at in April 2021, basically that first top when Bitcoin hit 65,000. So basically underperforming is what this chart is about. That coin is underperforming and needs to get back above those levels. What is overperforming is Solana. So one of the strong alts, when I talked about this in April, looking for altcoins that were putting in higher lows and potentially going to outperform BTC in whatever next leg, whatever altcoin season comes up. This is what we are looking for. Although it's been range trading for the last 6 months, it's still closing above major 50%. And even on that fearful day of Monday, you had the dump down to 109, higher close back above all those previous swing bottoms, which is a great sign. The following day, close above the 50%. The next day, just deciding what it wanted to do, get rejected at 50. And then yesterday, follow through, close above 50 here, close above 50 here. And the move seems to be on. It's one day so far. Remember, we do like to see at least 3 days of closing action here, and that is the $160 level. So when I was talking about this back in July, looking at all the strength to the upside, it seems like this was a flush out of leverage. Basically, all the longs on Solana trying to get in. You had the double top form, flush out, and the evidence to that is that you've seen a quick bounce back. As I said, a few more closes above this 160 level, which is the major 50% here, and that would almost confirm the move. So we were looking at strength building here, flush out those longs, and it's bounced right back. So into that V-shaped move for Solana. One more to look at here for the altcoins, because I know this is exactly what you guys want to see. CAS. So far, we really can't deny the chart. It's up, it's continued to put new highs. On that fearful day of Monday, it didn't even dump to the 50%. So it seems like it's relatively strong. I'm still reserved here because we don't know what the pullback's going to be after this move up. Are we going to keep seeing a V-shaped recovery, or are we going to see a pullback here for BTC? It's just been up for so long. Typically, you want to see some sort of pullback, and it's had 2 pullbacks here of roughly 10 weeks each. You can see it's 65 days top to bottom, a little longer here until it pumped, and then again around 71 days top to bottom. And so far, it's only been a handful of days that it's pulled back from this top. So it's still in the strong camp because it's above the 50% level. And as I talked about with BTC, you're looking at price as a sign of strength and weakness as opposed to prediction. This price must be hit, which I think is absolutely stupid. So it's doing relatively well. The main point here is time, and I like to focus a little more on time here. Now, I've got a comment here of granular, and the meaning behind this is on these pullbacks, you start to see the move get quite small and what I like to call like granular, right? You can see the bounce, and then it came back and sat on 50% of this move here. And you got the 50% of the move down, which it then bounced off, hit, and then got rejected to sit back on the 50%. So as you start to get into smaller time frames, get into 4 hour, 1 hour, 30 minutes, it might be bouncing off each of those 50% levels until it finds its way out of the trading range. So I'm just going to be patient with this one here. The main point is it's above the 50%. It has had its dump, and for the last day or two, it's attempted the 50% and closed above the major one here at roughly 16.5 cents. So Friday, 9th of August, things are looking relatively rosy again after just a few days of extreme fear, a bounce back. Like, subscribe, and join the free community with the link in the video description. I'll see you guys back here at the next video. Don't go anywhere. Things are looking pretty rosy once again, as this, of course, is the volatility of cryptocurrencies. Have a fantastic weekend, and I'll see you back on the channel real soon. Take care and peace out.